Welcome to Week 2, Part 2. In this lecture video, we'll be talking about accounting, law, and ethics. We're also going to be talking more about ethical decision making, and we'll be talking about the different components that you need to think about when you think about ethical decision making, and we'll introduce this notion of justice. Finally, we'll talk about utilitarianism, Rawls, and libertarianism. And these three different concepts introduce this notion of imposed regulation and self-regulation. So let's begin. So here we have a more complicated Venn diagram. You can see that there are a couple of elements that we've seen before. In week 1, we talked about law and ethics. So we had law on the left side, that was the circle on the left. And then we had ethics, which is the circle on the right. Now we're going to introduce accounting. So that's the circle at the top. So when we talked about law and ethics, we had 3 different regions. Now we have 7 different regions. So here I give you an example of each of the different 7 regions. But what I want to do is I want to focus on just a couple of things. So let's look at region number 1 here. Region number 1 is a matter, decision, or some type of a scenario that involves accounting and nothing else. So region number 1 deals with accounting, and law and ethics are not involved. Okay, so that would mean that the law has nothing to say about a matter, and ethics has nothing to say either. For example, if you look at area 1, we can think about this example. Area number 1 would be asset accounts are coded starting with the number 1. Okay, so when I worked in public accounting, if you had an asset account, the asset account had to start with the number 1. So for example, cash might be account number 1010. Account receivable might be account number 1050. Inventory might be account number 1080. In each case, the asset account starts with the number 1. Okay, so that would be a scenario that involves area number 1 up here, right? This is an issue of accounting and nothing else. Let's take a look at region number 4 here. Region number 4, you can see, involves accounting, and it also involves the law. So region number 4 is an issue that involves accounting and the law, and it's not involving ethics. So the example that I give for region number 4 is this issue of cash flow statements. So when a company files an annual report, it needs to create cash flow statements. So cash flow statements basically explain how much cash is coming in, and it talks about how much cash is going out. So obviously a cash flow statement is something that deals with accounting, and the reason why publicly traded companies file them is because the law says they have to. So you can see that when it comes to a cash flow statement, it's a matter of accounting, the law, but it's not an issue of right versus wrong. A cash flow statement is simply an extra financial statement, and the law says you have to do it. There's no ethics involved. The area that we're going to focus on in this lecture video is area number 5. Okay, so area number 5 deals with accounting and ethics. So for tonight's class, we're going to talk about area number 5, and in a later lecture video, we're going to talk about area number 7 later on. Number 7 is accounting, law, and ethics. But for this particular video, we're going to talk about area number 5. Area number 5 is accounting and ethics. This is a matter that deals with something that an accountant would have to face on a daily basis, and it's something that is a matter of right versus wrong. So an example of area number 5 would be filing financial information or disclosing financial information. Let's say that an accountant thinks that additional financial information needs to be provided because it provides more transparency. So let's say the law says that you have to file basic financial statements. But as an accountant, I think that we need to file even more information than just the basics. We need to provide investors and the public with even more detail, even more financial information, because it increases transparency and we think it's the right thing to do. Okay, so we'll talk about the Premier Incorporated case later on this semester, and that deals with the exact same issue that I'm just mentioning here. But you can see area number 5 is an example of accounting and ethics, or right versus wrong. So tonight we're going to be talking about area number 5, and we're going to be talking about an ethical dilemma and then also making a decision. So these two things we've seen before. We know that an ethical dilemma is something where you have to make a trade-off. There's an issue of right versus wrong involved. And we have two tests for an ethical dilemma. The two tests are the harm test and the conflicting values test. So if we're faced with an ethical dilemma, then we need to create some type of decision, or here you can think some type of strategy. And the strategy that we have is going to determine what we do specifically. And the specifics that we do on a day-to-day basis are called behavior. So if a company is trying to decide whether to dump toxic chemicals in a lake or not, that's an ethical dilemma. Okay, so it's a very familiar ethical dilemma since I've used the example before. Let's say that the company decides that they're not going to dump toxic chemicals in a lake. They're going to do the right thing, and they're going to provide transparency and information to the community so the community can feel safe and feel like they're being involved. That's the decision that we're going to make. What about the behavior? If a company decides not to dump toxic chemicals and they decide to be more transparent and open, what does that mean in terms of day-to-day behavior for that particular company? It might mean that the company is going to hire an expert to come in and properly dispose of their toxic chemicals so they don't have to dump it in a lake. Behavior might mean that the company may hire a spokesperson or may send emails to the community to enhance transparency and openness. Behavior might mean that the company is going to have frequent press releases or town hall meetings with the community to enhance openness and transparency. So you can see here that the ethical dilemma is going to necessitate some type of strategy, which is what we call decision making. And we're saying that the decision making is going to govern or determine specific actions or behavior. So you can see that what we're doing is we're splitting decision making and behavior into two different steps here. But you can see that decision making is here in the center. And decision making is very important because in order to make a decision, we know that we have the different steps to ethical decision making. But ultimately, how a company decides to act, or how an industry decides to act, or how an individual decides to act, depends on how you think about right versus wrong. So that means that we're going to apply one of the different 9 approaches to ethical decision making. If you're trying to decide what decision to take, are you going to be a utilitarian? Are you going to be an egoist? Are you going to follow the love ethic? The 9 different approaches can be thought of in terms of this concept which we call justice. We'll talk about the fact that justice involves 4 different components. So for now, just know that we have the 9 different approaches and justice. Here at the bottom, what are some other additional factors that determine the decision or strategy that we take? Well, certainly practical considerations are important. Practical simply means what is possible, right? So you can think of practical as being what is possible given a certain constraint that you're working with. Personal. Personal decisions are important because if an individual is involved, we know that one of the tests for deciding what to do ethically is to check your gut. So personal is an important component to think about. Organizational is extremely important. What does the organization say you should do? Organizations have norms that are explicit and implicit. So explicit norms within an organization, typically you can think about in terms of things that are written down or things that are codified as rules that are spelled out for employees. So if you have a code of conduct, that's an explicit organizational norm. So a code of conduct might say, for example, that you have to wear a suit to work, or the code of conduct might say that you have to work at least 8 hours a day. That's explicitly spelled out. Implicit rules are typically what we call culture. Implicit is something that's not written down, but it's still a rule nonetheless that everybody understands and knows that they should follow. So, for example, as an implicit rule in public accounting, during tax season, there was an implicit rule that everyone should be coming in on Saturday morning no later than 10 o'clock and work half the day. Now, nobody actually said you have to come in on Saturday, at least in the office that I worked at, but it was understood that you were supposed to do that. Also, we had an office holiday party every year, and nobody said that you actually have to go to the office party, but it was understood that you really should go to the office holiday party unless you're sick or you really can't go. That's another example of implicit culture. Those are non-ethical examples, but we can think of a lot of ethical examples or ethical considerations that are explicit and implicit. So, for example, does a company have an explicit code of conduct that tells you how you should make a decision when you're faced with an ethical dilemma? Implicitly, does the encourage encourage you to do the right thing? Is there a culture that's based on short-term performance and profit? Or is the culture based on doing the right thing and making sure that you act ethically? Those are organizational considerations that are going to inform decision making. Finally, we have environmental. So environmental doesn't necessarily mean the environment, but environmental typically means the government. It could mean the profession. For example, for accountants, we have the AICPA. That's going to also influence the type of decision that a company or individual is going to make. Okay, so next, let's talk about this notion of justice. So justice means, and let's look at this quote here, equals should be treated equally and unequals unequally, according to Aristotle. Right. So justice, and I'll read this here, factors into ethics in accounting because it drives and provides rationale for balancing self-interest and the interest of others. Okay, so what does that mean? All right, so if we look at justice, we can see that justice is made up of 4 different components. So first we have fairness. Fairness means treating someone according to some standard of right versus wrong. So if you say that you are treated unfairly, it means that you are not treated according to a standard of right versus wrong. Okay, so you did not treat me fairly means that there is some standard that you're supposed to follow, and somebody did not follow that standard. That's why you were treated unfairly. Equality is this notion of consistency. For example, if you say that everyone who shows up early is going to get a bonus. Okay, so you could say that's fair. If you show up early, then you'll get a bonus. That means that everybody who shows up early is supposed to get a bonus. That's consistency. These next two components can be understood to mean rights. So rights means some type of positive or negative expectation. So with the example of if everyone shows up early, or if somebody shows up early, they're going to get a bonus. Well, that means if I show up early, then how much is my bonus? Let's say I'm going to get $100 for showing up early. That's a positive expectation. I'm expecting to get something, right? What about if I show up early, then I'm not going to be reprimanded? Well, that's a negative expectation. Positive is when you actually get something. Negative is when you avoid something, right? Typically, when we think of positive, you think about, oh, if I do something or if I act a certain way, I'm going to get an A in the class. I'm going to receive money. Negative is you avoid something bad, right? I'm not going to get fired. I'm not going to have my paycheck docked. I'm not going to lose a benefit that I have. So justice involves rights, positive or negative, and desert. Desert means that you receive the rights you expect. Okay, so let's combine all of these four different terms. And you can see that I'm defining these differently than you'll see in the book. One, because I like to simplify everything and make it easy to understand. This is not a philosophy class, so this is obviously an accounting class. So we can give an example that's simple to try and make it easy for everybody to understand. Let's think if you have a lot of billable hours, then you're going to get a bonus. Okay, that was actually true when I worked in public accounting. If you work additional billable hours, then you receive a bonus. So is that fair? Sure, I don't see why it's unfair. If somebody works additional hours, if they have a lot of extra hours or overtime, then they're going to get a bonus. I don't see why that's unfair. Well, I'm going to get a bonus, so that's a right. So I'm expecting to get something if I work extra hours. If I actually work the extra hours, then I expect that the company's going to follow through and give me my money. That's desert. And I expect that anybody who works extra hours is going to receive the bonus as well. That's equality. So you can see here that justice involves these four different elements. Now, what I want to point out is this issue of fairness. Fairness means that you're following some type of standard of right versus wrong. Remember, we have 9 different standards or approaches, right? Can you think of one example of the 9 different standards? What about Kant's ethics? What about egoism, Sidgwick's dualism, intuitionalism, contractarianism, love ethics, right? Those are the different standards. Okay, so let's talk about justice here. in terms of two things. Procedural justice means how you deal with process. Okay, that's procedural justice. So it deals with administration. So for example, if I have a problem with another employee at the office, there should be some type of procedure. The procedure should be fair. The procedure should enable me to receive some type of answer. Right? We call that a right. The procedure should involve desert. It should be equally applied. That's equality. Right? More importantly, and this was mentioned in the text, justice also involves distribution. So if you have limited resources, how do you figure out who gets what? So you can see that when it comes to distributive justice, we have 5 different approaches. So you can provide resources in accordance with equal share. That's one method you can use. You can provide resources based on individual need. Personal effort, social contribution, or merit. Equal share would be like receiving a piece of pie in my family. So in my family, everybody likes pie. So nobody's going to get less pie, nobody's going to get more pie. Everybody gets exactly the same thing. Or inheritance. So my parents always said, oh, when we pass away, you and your sister are going to get exactly the same thing. That's equal share. Individual need is this notion that if somebody needs or requires more, they should get more. If somebody doesn't need as much, they should be getting less. Right? So individual need with the pie example would be, I'm not very hungry anymore. I don't really want any pie. So just give me a little piece, and then somebody else who wants more can get more pie. That's individual need. Personal effort means the more you try, the more you get. Okay, so I've been working all day. So you've been staying home and doing nothing. So since I've been working all day, then I should get a bigger piece of pie than you because I've been working more than you have. Social contribution. Social contribution is hard to explain with a pie example, so I'll give you a tax example. For social contribution, if you employ ex-felons or if you adopt children, then you may receive some type of tax credit. That's social contribution. So if you do something that is deemed to be beneficial to society, then you receive some type of benefit in return. Merit is the distributive justice perspective that we've all heard of, and this is the most commonly recognized perspective. Merit means if you do a better job, you get more. So if you are more productive at work, if you do a better job than other people at work, then you're going to get a raise and you're going to get more money than other people might get. Let's take a look at number 5 here. Here we have utilitarianism on the left. We have libertarianism on the right, and then we have Rawls' theory in the middle. First, let me define what each of these different approaches mean, and then we'll talk about imposed and self-regulation. Utilitarianism is one of the 9 different approaches that we explicitly studied. And utilitarianism is this idea that you need to maximize the greater good. It means the end result is the most important thing, and the end result for everyone else is the most important thing. So if you were a utilitarian, you would be okay with violating a couple people's rights and telling a couple people what they have to do, because the most important thing is that you're trying to get a certain end result for everyone else. Libertarianism is a form or variation of a deontological framework It's actually a form of non-consequentialism. And libertarianism is this idea that you shouldn't violate other people's rights. The end result is not necessarily the most important thing. Libertarians say that liberty, personal property, and individual rights are extremely important. So if you're a libertarian, you might have the attitude that, hey, I should be allowed to do what I want to do. Those are my individual rights. If I acquire property legally within the law, then the government doesn't have a right to take that property from me. And being able to exercise liberty means that I should be able to act in whichever way I think is appropriate for myself. That's libertarianism. So you can see that utilitarianism here is a consequentialist framework. Libertarianism is a form of non-consequentialist framework. In the middle, you have Rawls theory. Rawls theory is a mixed framework. So Rawls theory says a couple of things. Rawls theory is a hybrid approach, or it's a mixed framework. And Rawls theory says a couple things. Rawls theory says that, let's say that you are trying to decide how much pie to give everybody, right? So if you're trying to decide how much pie to give everybody, maybe a utilitarian would want to give everybody the same amount because that would make the greatest number of people happy. If you have a pie and you're trying to split the pie amongst different people, maybe a libertarian would say that it's okay for Jeff Bezos to get 99% of the pie and everybody else to get whatever crumbs are left because Jeff Bezos happened to be more innovative. He happened to come up with a good idea. He has a successful company. And who are we to tell him that he should give us some of his pie because he earned the pie that he has himself? Well, Rawls theory says, let's say that we have a pie and we're trying to figure out how much to give everybody. So you would think that if I'm a utilitarian, I get the same amount as everybody else. If I'm a libertarian, I might get almost nothing, or I might get almost the entire pie myself. Well, how would you feel if you were somebody that was at the very bottom? If you're at the very bottom, you probably wouldn't be happy with getting a couple of crumbs, right? But if you're at the top, probably you're not going to be happy getting the same as everybody else. So we need to find some type of middle ground or compromise. So in the original position, it means essentially that you're going to eliminate your bias. Let's make a reasonable decision. And veil of ignorance means you don't know which position you're going to be in. Okay, so if we have a pie, then let's figure out how to split the pie up. So eliminate your bias, and you don't know which position you're going to be in. So would you be happy getting nothing? Probably not. Do you think that if you work harder, do you think that you deserve a bigger piece of the pie? Probably yes. So that means that we would conclude that we would have to use a maxi-min approach. Maxi-min means maximize the minimum. So this notion of Rawls theory essentially, simplistically states that if you have a pie, you would want to make sure that the bottom person gets at least enough. And somebody who works harder gets a little bit more. Right? So that's how the pie would look under Rawls theory. If you were a libertarian, you would be okay with Jeff Bezos getting 99% of the pie and everybody else getting nothing, potentially. If you were a utilitarian, you would say it doesn't matter how hard you work or who you are, everybody gets the same thing. Okay, so you can see that Rawls' theory is a hybrid of utilitarianism and libertarianism. Now, this is important because you can see here, utilitarianism is this notion that we want to make the greatest number of people happy. And this is the proxy for what we call imposed regulation. Okay. Imposed regulation means the government is coming in. They're telling the accounting industry, hey, okay, we're not going to worry about your rights right now. We're going to tell you what you need to do because we're trying to make the population of investors better off. Libertarianism is the proxy for what we call self-regulation. Self-regulation means that the accounting profession shouldn't be told what to do. They should be able to make their own rules. They should be able to govern their practitioners themselves without any interference from the outside. So you can see that imposed regulation is the government coming in and telling the industry what they should do. And the justification is because we're trying to make the greatest number of people better off. We're worried about the end result. Libertarianism is different because it's this notion that nobody should tell the accounting industry what they should do. The profession should be allowed to govern themselves. And that's this notion of self-regulation. So we're going to go into this in a lot more detail, but just for now, just try to understand the concept behind all of these different things, and then we can delve into the details a little bit more. Here at the bottom of this handout, I have two different activities. In problem number 1, it's asking you to figure out which area these different matters are going to be in. So remember, up here, we said that you can have 7 different regions. So I'll post the answers for you at the very bottom of this handout. But take a look at these different examples and then figure out which area you think would be involved. So for example, we can look at number 2. It says the abbreviation for the word debit is DR. Okay, so which area would that be? The abbreviation for debit is DR. Well, debit is an accounting term, so certainly it's accounting. Does the law say that debit has to be abbreviated DR? Is that in the law? I don't think so. Calling debit DR, is that a matter of right versus wrong? I don't think so. So that would be region number 1. So you can see here, this would be area 1. Okay, so try to do these yourself, and I'll post the answers at the very bottom of this handout. Also, we have problem number 2, and this is the Institute for Management Accountants Code of Conduct. Okay, so I'd like for you to take a look at this code of conduct, and in the weekly write-up, I'm going to ask you to analyze this in terms of this notion of justice. Okay, so if you have any questions on this, let me know. Of course, if you have any questions on anything that I went over, then you can send me an email or you can post it in the discussion board, and let me know if you have any questions that I can help you out with. And thank you for your attention.